Hi, I'm John Gerspach, Chief Financial Officer of Citigroup. This morning, we reported results for the fourth quarter of 2012. I'd like to take a few moments to go through them with you. Citigroup's net income for the fourth quarter was $1.2 billion, or 38 cents per diluted share. This result was impacted by some significant items, specifically charges associated with the repositioning actions that we announced last December and a debt valuation adjustment. Excluding these items, our earnings were $2.2 billion, or 69 cents per diluted share, compared to 41 cents per share in the fourth quarter of 2011. In addition, operating expenses increased by 5% over the previous quarter, owing to higher legal and related costs, which were driven primarily by the $305 million charge for the independent foreclosure review agreement and other U.S. consumer-related matters. Also, our net loan loss reserve release of $86 million in the fourth quarter was significantly lower than prior periods. We maintained good momentum in our core operating businesses, securities and banking, global consumer banking, and transaction services, while at the same time further reducing the impact of Citi Holdings. In securities and banking, revenues of $4.8 billion grew nearly 50% from last year. The results were driven primarily by an increase in investment banking revenues, which grew 56% over the prior year and 7% sequentially, and in fixed income market revenues, which were 58% higher than last year, although down 27% sequentially from a strong third quarter. In addition, operating expenses in securities and banking were down 2% from last year, driven by efficiency savings. Our transaction services franchise continued to show positive momentum. End-of-period trade loans were up 24% from the prior year, and average deposits were up 16%. In North America consumer banking, total revenues of $5.3 billion increased 3% over last year, primarily driven by higher gains on sales of mortgage loans. In addition, average deposits grew for the seventh consecutive quarter, and net credit margins continued to expand year over year for both credit card portfolios. In international consumer banking, both revenues and expenses grew 4% year over year. Total average loans increased 5% from last year. Card purchase sales were up 10%, and investment sales grew 36% year over year. In addition, the credit quality in our international consumer portfolio remained strong. Overall in Citigroup, end-of-period loans grew 1% year over year to $655 billion, while deposits grew 7% to $931 billion. Citi Holdings assets were reduced by $15 billion in the quarter, and now total $156 billion, or roughly 8% of total Citigroup assets. Finally, Citi's capital ratios remain strong, and the company remains highly liquid. At the end of the fourth quarter, Citi's estimated Tier 1 common ratio under Basel III was 8.7%, up slightly from the third quarter and well above our year-end target. All this said, our bottom-line result was not what we would have liked it to be. We know our franchise has the potential to do better, as shown by the many positive items from the quarter. The environment remains challenging, but Citi also remains uniquely positioned to help our clients navigate this complex world. Even in this environment, we made real progress in each of our core businesses and regions. In consumer banking, we continued to see strong loan growth in Latin America. In Asia, we began to move past some of the regulatory headwinds, which slowed volumes in the second half of the year. Credit trends in our global consumer portfolio remained favorable, with net credit losses and delinquencies at historically low levels. In securities and banking, we demonstrated our ability to grow revenues while maintaining expense discipline, and our investment banking franchise showed good progress. And in transaction services, we showed positive operating leverage for the year, even in this continued low interest rate environment. To get more in-depth information on today's earnings report, visit Citi's Investor Relations webpage, linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our first quarter results with you in April.